Welcome to the McAnulty Method, where financial expert Frank McAnulty and Colin Sorrells will answer our questions about personal finance and how we might live a more effective and wealthier financial life. Hi, guys.
How you
Hi,
doing?
Bill. How are you?
I'm okay. Um, I want to bring up a question that we had from the last video, which was dealing with, is this a good time to buy a home or buy a house? And so we've had some follow-ups with, okay, if it is, or whenever that good time is, how do you buy a house when you really don't have any money? I'm hoping you guys can tell me.
Well, hopefully you're earning enough money. That's, once again, that's the key. Can you afford, as we talked in the previous segment, can you afford to make the monthly payments without a tremendous amount of financial stress? That's question number one. I know, Bill, your generation or our generation, I don't know why your generation, our generation is more or less, we grew up with the idea you had to get 20% put down,
Mm-hmm.
right? And, you know, when houses were $100,000, okay, that was $20,000. Doesn't sound as bad as now when houses are $1 million, $200,000. But there are actually quite a few ways, especially with a first time home buyer. That's the key. They want people to get into houses. They want new homeowners to get a house. So it now comes back to, can you afford the house? With today's interest rates, it's about, let's just say, $1,000 per $300,000 worth of mortgage. There's taxes and interest on taxes and insurance. Insurance is pretty cheap. Taxes, depending on where you are, add to that. But so can you afford the payment? Can you meet the ratios? Because there are quite a few programs where you can get into a house for practically nothing. Now, sometimes there's extra costs, but you can do it if you can afford it. And it's interesting, the one that most people have probably heard are VA loans. If you happen to have been in the military and qualify for a VA loan, that can be a 0% down loan. They want to help you buy a
Wow.
house. And so it's a great program. Now, I'm not saying that you say, well, okay, I'm going to join the Army just to get a VA loan, but it's a great benefit if you've been in the military. So that's one way. It's also a great way to get college paid for. So if your prospects, financial prospects, are dismal at the moment, maybe stint in the to figure out what you can get the government to pay for your college and to help you buy a house might not be a bad idea. But I know a lot of people, oh, okay, he's gone off the rails. I ran into another program recently when a sister-in-law bought a house. And she was buying a house in not it was on the East Coast, but it wasn't in a rural area particularly. It's right near the beach and lots of developments and golf courses and everything else around where she's buying her house, but yet the USDA Rural Housing Loan Program wanted to give her a 100% loan to buy her house. And you have to look into these things to see where they're available, but it's not just for what you consider, rural, Kansas and things like that. I'm sure there's lots of areas in California that qualify for these loans. And the beauty of them is there's no money down. There's no maximum home purchase price. So if you can afford the payment, you can buy a big house through this. Lower interest rates. You may have to pay a guarantee fee, but they'll add it to the loan balance. And the mortgage insurance is cheaper than a regular FHA loan. So,
Well, that sounds like a great deal.
it actually is. And like I said, I had never heard of it because obviously in the Los Angeles area, I probably think that LA County doesn't have these, but they might. Up near the border with Kern County, you might be able to get a USDA loan to buy a house. I don't know. I haven't looked into it.
Huh.
Well, for us who would like to stay more in the city, what are there options where maybe we could go under the 20%? Or, I don't know if there's a zero down in the city, but
No, but Colin, there is a 3.5% down.
well, that's a lot better on now we're back down to that 35,000 range for these $1 million
Right.
homes.
And to a certain extent, it comes down to, look, if you, let's just say you're looking to buy $1 million home and you can't put together $35,000 for the down payment, well, maybe your finances aren't good enough that you should be buying that house.
Mm-hmm.
But that's an FHA loan where you can put 3.5% down. Everybody does FHA loans. Once again, here's the key. You got to have decent credit, not perfect credit, and you have to be able to meet. You have to be able to afford it, because they don't want to say, okay, sure, we'll let you buy a house. 50-60% of your income is going to go to your mortgage. They know that's not going to work. They don't want the loan to go bad. They want you to stay in the house. And I'm looking at it right now. The minimum credit score for a 3.5% down payment is a 580.
I wouldn't even call that average.
No, that's a poor credit score. But once again, you have to have the income. And of course, let's see, this loan will go up to $822,375 in places like Los Angeles and Orange County. Now, you will have to pay mortgage insurance, which is something that's added onto the loan every month. But once again, if you're buying, I've run the numbers, I've looked at other people running the numbers. If you buy a house and you stay in it for 4 years, with the way appreciation's been going around here, you can get rid of the mortgage insurance as soon as the mortgage balance is equal to 80% or less of the home value. So it can and will go away. Now, you have to request that it goes away. You may have to pay for an appraisal in the future, say, $300-500. Just say, well, my house is, when I bought it, it was 800,000. Now it's worth $1 million. My mortgage is under 80%. I want to get rid of the mortgage insurance. But it gets you in with the minimum down.
Well, and I like, I think first, obviously look for a USDA. If you get 0%, get 0%. But, it used to be, from my understanding in past generations, you didn't jump into the 3-bedroom home. I feel like the younger generation, we're looking for the end home. It used to be you got yourself a 1-bedroom, you stayed there 5-10 years, you built up some equity. That equity became the down payment for the slightly bigger home, and maybe you got another home after that. But I think with these 3.5% downs, because I think with a lot of these you're talking, there's a $550,000 or an $800,000 limit on how big the loan can be. Get that smaller home, get the lower percent down, start building equity in the home, and then when you sell, the price will go up, you'll sell it, and then now maybe you do have that. Maybe it's 3.5 again, or maybe you have the 20% for that bigger home.
No, you do bring up a great point. I know, the first thing I bought was a condo in Florida. Moved, then obviously went back to an apartment when I moved back to LA. Moved to Florida, bought a house. You're absolutely right. You keep using the appreciation to buy bigger and and better, let the house work for you. You know? Or even, buy something that may not be in 100% shape. When you're young, you have all this energy. Anybody can paint. I don't care what they say. Anybody can paint. And believe it or not, most people can do 80% of what needs to be done around the house. Will it be perfect all the time? No, but they can do it. And in fact, Colin, I have a friend that what he does is he buys houses that are in bad shape and he goes and lives in them for a year while he has a full-time job. And then in the evenings and weekends, he works on the house, fixes it up, sells it, moves to the next one. Now, that's the extreme side of it, but you're absolutely right. If he could do that 2 or 3 years in a row, he'd have enough down payment for a big house. But now it's become a sort of like what he likes to do. So now there's all sorts of ways. The key is, the internet in this case is our friend. If you're thinking of buying a house, look up affordable loan programs, look up low down payment programs. There's another one that allows you to even take into account. It's called the Home Ready Mortgage with 3% down. It allows you to use your parents' income to help you qualify. And it uses broader income. So, let's say you're paid some in cash or you're 1099. There are lots and lots of programs, 3%, 5%, 10% down. I recommend, if you could get 10% down, to me, seems reasonable. Pardon?
I said that's a win.
Yeah.
Anything under 20 is a win.
Right. And so the key is there are programs. Once again, it depends on what you want. Is it really, really important for you to own your own house? Like you said, it could be a 2-bedroom. I'm not a big fan of 1-bedrooms for anything, especially if you buy it, because I don't think there's a market for people to buy 1-bedrooms. That's just me. If that's all you can do, and it'll go up in value. I mean, at one time we bought, as a vacation home with my brother, a small little cabin. I mean, this cabin's small. I mean, it was almost a Rodney Dangerfield joke how small it was. But we owned it for 2 years, and it went up. I think we bought for $18,000, but it doubled to $36,000 in 2 years. It's like, hey, now we got $20,000 out after the mortgage to put down on a bigger place. So we did exactly what you said. We sold the teeny little place and bought a bigger place. So that's a great idea.
All right. I think this is a topic we will undoubtedly revisit, because trying to get into the housing market, it really is, it's a scary thing for a lot of people. And the more that we know, the better off we'll all be.